So today is Wednesday, the 22nd of July, and coming into the market open today after yesterday, the S&P closed up on the day and is holding the lower time frame moving averages relatively well for the most part, and actually coming into the right side of this kind of ascending triangle. Is tightening up as we move towards the right side of this pattern. So the fact that it's still trying to maintain these levels, and the volatility is contracting, it is still I'm still optimistic in terms of this potentially breaking out to the upside, and actually this rally just being the first leg of a longer move or a move higher, and this is just a brief consolidation period, which is obviously well needed after that initial rally. So just looking at the cues as well, no real change in terms of what has been seen throughout the week, but I guess if anything, the downsides is still kind of looking a bit heavy, especially after this gap up that we had yesterday, which is now basically being reversed with this gap down into the open today. So still chopping, still below the lower time frame moving averages, and the 10 and 20, more importantly, still below the 50. The Dow is also holding up relatively well, similarly to the S&P, is below the low time frame moving averages, but at the same time it's not enduring too much selling pressure for the most part. There has been some down days, but it is actually still kind of holding its highs for the most part. It hasn't retraced too much. And similarly for the IWM, which is actually probably looking on par with the S&P in terms of the way that it's really kind of, the volatility is really contracting now. The 50 is still holding, hasn't been tested yet, and it's looking like these highs are, for the most part, holding. So or these lows are holding. So moving into the Kospi, there was obviously a little bit of relief yesterday, but did fully retrace that move. I don't really expect anything to come from this until these higher time frame moving averages do get tested. The VIX didn't really see any movement from the day prior. The dollar index is still pushing slowly, albeit slowly, but it's still pushing higher. So if these highs do get taken and closed above, I think that would potentially pave the way for some continuation towards the upside. The semiconductor ETF is basically mimicking the NASDAQ, so not too much to read from that. The main ETFs to look at really are the sectors that are leading this month, which is healthcare and energy. And healthcare had a pretty strong close yesterday, but still below its 10 and 20 day, or maybe just closing above the 20 day right there from yesterday. But yeah, this level is holding, which is definitely a key level. So the fact that it can stay above here, if it can stay above here, will lead me to believe that potentially this is just a momentary correction before this continues higher as well. The most important thing that I'm kind of looking at the minute, or that is potentially telling the biggest story, is the energy sector ETF, which basically just comprises of oil and other energy products, so commodities rather. And the fact that the price is kind of holding above this gap was a big thing in itself for me. I thought it was potentially just going to retrace in this area and resume its kind of sell off, but the fact that this has happened whilst Iran US are escalating, it's not really filling me with too much confidence in terms of this being a dead cat bounce. And actually this key level now that it's just coming into and actually gapping into, or gapping above rather, into the open today is going to be a big test in itself. If it closes above this level, then that's definitely going to put on a lot more pressure. Then the next obvious target would be the 61 level up here. And I think if it did get up there, then I mean, the rally's back on, and I'd expect oil to really rally a lot more And if that is the case, then I'd like to think that would put a lot of selling pressure on risk assets and equities as a whole. Just looking at the oil chart now is basically the same thing, which is why I said that the energy ETF is basically mimicking oil, or is basically oil, because it is basically mimicking the oil chart, albeit just some slight differences. But yeah, coming into this level is really key. And on oil, on Brent, it's around the 100 mark. So the 100 mark's probably the one to pay attention to if oil does, or if Brent rather does close above 100. That would be that would be a big sign to potentially be a bit more cautious, as the 10-day is really moving aggressively higher now. And looking at Bitcoin, it was looking really good yesterday, but coming into today, it's still early days. Market hasn't opened yet, so it could change. But these highs are currently being rejected. The one thing that I do like about this is the fact that this high wasn't taken, and it didn't SFP. It wasn't taken and rejected in that sense. It actually just retraced just before that got hit. So the fact that that was around basically 67k on the dot, and that happened, it leaves me to feel more optimistic about price continuing higher. And this is actually just a momentary pullback before it does go higher. But if this day does kind of retrace all of the prior day's move, the Tuesday move, and then start to eat into the move that we had on the Monday, or the breakout candle that we had on the Monday, then it will make me think that we're still in a range bound environment for Bitcoin and crypto as a whole, and actually the sector isn't ready to kind of push up yet. And actually, just looking at the market leaders, the Zcash is one of them. Zcash and Hype, the clear market leaders in crypto at the minute, and as you can see, it's rolling over quite obviously there. And similarly for Hype, it's moving averages 10 days below the 50. 20 is probably going to go below the 50 soon as well, and this market structure as a whole doesn't look great. And just looking at the number of stocks above their 20-day moving average around the 50 mark, the number of stocks making 1 month highs, no real movement from the day prior, but still towards the lower end of the range. Similarly for the number of stocks making 52-week highs. But the one potential sign of strength across these breadth indicators is the fact that the number of stocks making new 52-week lows dropped. So that means they're coming off of their lows, which is potentially a positive sign. And then just looking at bond yields, the 2-year does look like it wants to break out. So that makes sense given the fact that oil is spiking again and the risks of inflation are increasing again, which obviously makes sense that there won't be rate cuts, and if anything, potentially rate hikes. So that aligns with kind of bonds making a push higher. The 5-year is actually today making new highs of this move, and similarly for the 10-year hasn't made new highs from that were made in May, but is looking like it probably will. So based on everything that's kind of shown up in the charts right now, oil moving, bonds moving, equities still chopping around, and no real strength coming into the market, makes me believe that there's still chop at best, but potentially a bit more weakness to come into the markets and clear headwinds ahead of us. The one thing that I did notice today, or did reveal itself today after yesterday's trading session, was the number of stocks that made a 4% move on the prior day's trading day. It was the first time in 3 weeks, and basically throughout July, with the number of stocks making 4% gains being above 300. So the fact that happened after so much chop, and basically bears being in control for this whole time, there wasn't a day of this magnitude until the kind of latter end of June. So this is potentially a sign of strength wanting to re-enter the market. The big tell, I guess, will be coming into the after hours market earnings, which is a pretty big one today, being Google. They'll be reporting after the market close, and also Tesla. So their charts don't look super great, but at the same time, it looks like they could potentially go either way. So, yeah, I think today these two stocks in itself will probably be the ones to set the tone for the rest of the week and potentially moving forwards. If they report good earnings, for example, and the the stock price doesn't really see any positive reaction, then I think that would be a sign in itself that the market is actually really weak, and the good news is no longer good news in that sense, and the market does actually need to unwind a bit more. So coming into the market open today, I'm still neutral, no real clear signs, but if anything, I'm still on the cautiously bearish side. But like I said, with the primary breadth indicators potentially showing a bit of strength, wouldn't be surprised to see some strength come in as well. So yeah, just neutral coming into today.